Hello and welcome. In this video, we will learn what free float market capitalization is. Okay. Now, in the previous video, we learned what market capitalization is. Correct? You know that market capitalization is calculated like this. It is outstanding shares into current market price. For example, if there is a company which has total of 10,000 shares and each share is priced at 100 rupees, then the market capitalization of the company ABC would be this much rupees. Correct? So you know how to calculate this. Now the thing is, out of the 10,000 outstanding shares of this company ABC, 1,000 shares may be held by promoters, 1,000 shares may be held by government, 1,000 shares may be held by insiders, meaning those who know the inside details of the company, and 500 may be held by the trust, for example employee welfare trust. Okay, and after leaving all this, the rest 6,500 may be available to public or maybe is with the public. Okay, so this is just a number made up by me. Out of 10,000 shares, this is the shareholding details. 1,000 may be held by promoters, 1,000 by government, 1,000 by insiders, 500 by trust, and 6,500 by public. Now, what we do in free float market capitalization is that we neglect all these. Okay? We neglect all these and just take into the consideration the shares held by the public to calculate the market capitalization. Okay, so only this will be taken into consideration, leaving all these apart. Okay, so let us see that. Let us do that. So out of 1,000 shares, this is the split. Now we are taking only this into consideration to calculate free float market capitalization. So free float market capitalization is equal to the number of shares available to the public or being held by the public or being traded by the public into current market price. So let us assume that the current market price is 100 itself. So 6500 into 100 gives you this value, and this is the free float market capitalization of company ABC. Okay. So the normal market capitalization that we learned in the previous video is of less use to us. Okay. It is free float market capitalization which plays a major role in various things. Upon the normal market capitalization, we can just categorize companies into large cap, mid cap and small cap. But while selecting a share for investment, we look at the free float market capitalization. Okay. Now, I'll show you how to calculate this, or I'll show you the value of this in or for a real company after few minutes. But now let us see the features of free float market capitalization, okay, or the importance of it. So the importance of free float market capitalization are these. First is volatility. If the free float market capitalization is more, then the volatility of the stock or shares will be less. Okay. Now why is that? Try to understand. What does less or low free float market capitalization means? It means that the promoters or the insiders or the government is holding a lot of shares. Correct? Now what they can do is manipulate the price of these stocks. Alright? So they can make the price go in the direction that they want. So what happens is, due to this random movement, either in upside or downside, a lot of volatility will be created. Whereas if the free float market capitalization is more, then it means that public has a lot of shares. So the chance for manipulating the price of the shares is less here, and so the volatility is less. Okay. Now if the free float is less, then even a small amount of volume traded will move the price by large amount. Whereas in case of high or more free float companies, a lot of volume is required to make the price either go up or down. Okay. So this is why more free float means less volatility. Okay. Next, second is voting rights. Voting rights. Now this, what is this voting rights? We have learnt about this, correct? Everyone who owns share of a company gets voting rights. Now if the public has more shares, then their votes matter. Okay. If the free float is less, it means the public has less importance while deciding the important aspects of the company. Okay. So voting rights should be more. So meaning the free float should be more. Alright. And the third one is weightage in indices. So you know what an index is, correct? So Nifty, Sensex, Bank Nifty, Fin Nifty, all these are indices. Now the weightage of a company in an index is decided based on the free float market capitalization. Okay. So if the free float is more, then the company has more weightage in an index. Okay. So I'm going to go to my desktop and show you all this practically. Alright. Alright. So I'm in the NSE India website. So here I will enter TCS, okay, and click on Tata Consultancy Services in equity. Okay. Now when I click on that, it will load up the details of the company. Alright. So here you can see total market cap in lakhs is this much. Alright. This is of TCS, Tata Consultancy Services. So total market cap in lakhs is this much, and the free float market cap is this much. Okay. So this value gives you an idea as to how much shares are being traded publicly. Okay. So always this value will be more than this value. Alright. Total market cap will be higher than free float market cap. Okay. Now if you go to Google and just search Nifty weightage or Sensex weightage, you will get a lot of results. So I will click on this website by equitypundit.com, which gives me a list of all the companies in Nifty 50 index. Okay. So Nifty 50 is an index. I hope you know that by now. So here you can see all the companies that are in Nifty 50. and all these are arranged according to their weight. And you can see Reliance has 12.86% weightage in this index. Okay, so I'll come to this. If you see the market capitalization of Reliance, it is this much. Okay, it is in crores. It is this much. If you see that of HDFC Bank, it is this much. If you see that of Infi, it is this much. ICICI, it is this much. TCS, it is this much. But if you see here, TCS has market capitalization of this much, which is higher than Infosys. Correct? So Infosys has only this much, whereas TCS has this much. But then Infosys has more weightage when compared to TCS. So Infosys weightage is 7.66% and TCS weightage is 4.91%. This is because the free float of Infosys is higher than the free float of TCS. So let us check it out. I have already shown you the free float of TCS. So here I have the details of Infosys Limited. Okay. If you see here, total market capitalization of Infosys is this much, whereas the free float is this much. Okay, free float is this much. So if you compare the free float of Infosys and TCS, you can see that the Infosys has more free float market cap than TCS. Okay, TCS. You see here, total market cap of TCS is higher than Infosys. Total market cap of TCS is higher than Infosys. But then free float of the company Infosys is higher than that of TCS. And that is why it has higher weightage in the index. Higher weightage in the index. And you can see it is arranged in decreasing order. Alright, decreasing order. Now, what is this weightage? See, I am going to keep it simple and tell you in a simple way. If let us say 1, 2, 3, 4, 5. Okay, if these five stocks are falling on any particular day, then you can assume that Nifty is falling. Okay, if these stocks are moving up, means the price is moving up on any particular day, then you can assume that Nifty itself is moving up. Okay, so it is a very simple way to put it, but that is how you can imagine the weight to be. Okay, so the weightage of this company in the index is this much percentage. All right. Yes, so I hope the concept of free float market capitalization is clear. Free float means how much is being traded by the public. If it is a lot, then it is a good sign. Alright, yes, so that's it for this video. I want you to go ahead and check out all the links that I have showed you here, okay, which will make the concept more clear. Alright, so I'll see you in the next video. Till then, take care and thank you for watching.